Hello, this is Alex Kazmark for SpotEuro, and this is your free daily video for Friday, April 2nd, 2010. A quick reminder before I begin, the purpose of this free daily analysis video is education and not an alert service. I'm not going to make any trade recommendations, but what I am going to do is conduct technical and fundamental analysis, point out levels of support and resistance for the next 12 to 24 hours, and talk about potential trade setups that we may be using during our live trading session. Please keep in mind that trading with leverage is very risky, so please don't trade any real money until you've established a proven track record of success on a demo account. Trading conditions are always changing, so make sure to watch Monday's video to stay updated. Happy Friday, everyone. With Europe done for the week, we're looking for an exciting New York trading session as the release of the non-farm payrolls will be our last chance to see volatility. The last few days of trading have been filled with risk appetite, and we've seen the dollar continue giving up ground to the majors. The biggest news release of the last 24 hours was the Swiss National Bank intervention that gave the euro a run of nearly 350 pips against the Swiss franc in less than 10 minutes. We were expecting this move, but weren't able to catch it ourselves. We still think the Swissy will continue strengthening despite Swiss National Bank's efforts, just as it had in the past year. Our goal in the next 24 hours is to find an opportunity for a trade during the non-farm payrolls release. We don't anticipate there to be much action following the first couple of hours of trading as the stock markets are closed. And getting started with the analysis, currently looking at the euro dollar on the daily. As you can recall, we've been following the move from the 152 area down to the 134.50 mark. What we're looking at here is the retracement that we have been following that started back in 2008 when the euro started to rally from the 125 level. Market went up to 152 before stalling and started coming down. What we're expecting here, rather, let's see what has happened. We reached the 61.8% retracement level several times, and most recently we fell below that, which was a bearish sign for the euro. Market has since retraced back up to the 135.80 level. Let's take a closer look at what's happened now. We're following this retracement on the last leg down. Move has retraced 61.8%. And we're either looking for a break above 136.15, or we're looking for the market to turn around and start getting in favor of the dollar. We do expect the dollar to strengthen tomorrow, and if we take a look at the Fibonacci retracement from this move up, we can see that the 38.2% retracement level lies exactly at the 50% mark, matching the 38.2% retracement level from this leg down. We're looking for the market to either break above that 136 level and continue on a bull run above 138.20 over the next couple of days, or we're looking for the market to retrace back down to 134.70 area before possibly converting and continuing lower in favor of the dollar next week. Looking at the pound dollar trading at 152.90, it has continued to strengthen. We're looking for the market to continue heading higher, but we're looking at the 154 area as a good level of resistance. Also looking for a possibility of retracement down to 150.120 following this upward sloping trend line, as this move lower could be seen as a false move in favor of the pound, also creating a possible short-term double bottom. Looking at the dollar Swissy, again, very interesting considering the SNB's intervention. We're still looking at the 105.20 level to be a good level of support. And now that the Swiss National Bank intervened, we know that the 104.35 level is going to be interesting, and it's most likely going to be tested once again. And we're looking for another break of 105 for a move lower, and a retest of 104.30 before a move down to the 103.80 level. Looking at the dollar yen, we are looking at this as a current top at 94. Trading at 93.80, we're expecting a move down to test 92.60. Looking at the dollar Canadian, it has continued to strengthen, breaking below this Slope line now double bottoming here at the 10080 level. We're looking for it to continue heading lower and testing parity. Looking at the New Zealand dollar, Kiwi being the only loser against the buck for the day, we're looking for a break of 70 cents and for a confirmation that the Kiwi is going to continue losing strength. All of this following the IMF statements that the Kiwi is overvalued by 10 to 20%. Looking at the Aussie, we continue to be puzzled that the Australian dollar has this much strength following worse than expected retail sales data and building approvals. Very important that this downward sloping trend line isn't broken. We're looking for a top around this upward sloping trend line, which right now is near 92.20. We don't want that level to be broken. Today is going to be very important, and we're looking for a move lower, even though the current technical analysis points to a continued Aussie strength. If this downward sloping trend line is broken, then we could definitely expect the market to continue heading higher, and the next levels of resistance will be the recent pivots. Highlighted here. If these are broken, specifically the high one at 94, we are going to be looking for parity over the next few months. Zooming in, we can take a look at the daily chart. A retracement from the current move up has found a nice support at the 38.2% retracement level at 91.30. We're looking for a move lower to confirm that the market's going to continue heading lower, and specifically a move below 90.80, breaking this upward sloping trend line for a move down to the 89.70 level. And quickly taking a look at the euro yen and the pound yen. First up, euro yen. We continue to be bullish on the euro yen, now reaching the 100-day moving average at 127.50. We expect some stalling here. We're looking for the market to retrace down to 125.25 before continuation higher. Looking at the pound yen, a very similar scenario, but we're looking for a retracement down to the 140 level, 140.80 perhaps, before the continuation higher resumes. Current top at 143.50. Previous level of resistance, possibly now as well. And of course, a break above 143.80 will confirm the move higher. And quickly, we're going to cover the Euro Swissy. This is the daily chart. Here is the Swiss National Bank intervening. Market fell right below 141.50. A lot of orders came through buying the euro, selling the Swissy, and the market jumped about 350 pips up to 144 before settling down at 143.25. We're looking for consolidation throughout the next 24 hours, and we're looking for a breakout higher or lower, most likely in favor of the Swiss franc, as we do expect Swiss franc to continue despite the Swiss National Bank's efforts of keeping the Swiss franc from gaining this much strength. If anything, we're moving. If we start breaking higher, we're looking for a move back up to the 146 level. Previous level of support may now turn into resistance over the next few weeks. If you'd like a more detailed analysis with potential trade opportunities during our live trading session, please join us in the members area. This has been Alex Kazmark for SpotEuro with the free daily analysis video for April 2nd, 2010. Until Monday, have a great day and good luck trading. And don't forget to join us for the non-farm payroll session later on in the day, New York Open, 8 a.m. Eastern Standard Time.